The Accunet Mortgage and Realty Show is sponsored by Accunet Mortgage, an equal housing lender, NMLS ID 255368, and Accunet Realty Advisors, which is a separate company from but still affiliated with Accunet Mortgage.
Putting a roof over your head without the headache. Get answers to all of your home buying questions. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
And our Sunday best to you. Good morning and welcome to the Accunet Mortgage and Realty Show. I'm Steve Kettlebar, along with Accunet Mortgage's licensed millennial loan consultant, David Wickert. If you have a question or comment, you can give us a call at 414-799-1620 or throughout the Midwest on the Accunet Mortgage toll-free talk line. That number is 1-800-877-1620. What's on the agenda today, David?
Well, good morning, Steve. Good to be with you. And I think Brian is on the line as well. On location in New Orleans. Dad, are you there? All right, we'll see if we can loop him in sometime later in the show. But definitely on the docket for today's show includes, not to pile on, but Friday's jobs report, which came in with a impressively low 4.7% unemployment rate, but not everything it's cracked up to be. We're also going to talk about, after married couples, who is the second largest group of home buyers. And then also want to touch on a few other topics, stories from the front lines of mortgages and real estate, including talking about bad pre-approvals, how do we use part-time income, all the good things we get to do in the mortgage world day in and day out. But wanted to begin with the Fed Watch 2016 continues. So what we highlighted last week is the Fed has two congressionally mandated jobs. The first, full employment, which previously meant 95% unemployment, and so in the reverse, that's 5% unemployment. And then the second piece are stable prices, which equates to controlled inflation somewhere around 2%. So we had noted last week that those two key indicators were going to be published this week, and those were going to be the telltale signs of what the Fed might do later this month at their mid-month meeting. So I think, as has been beaten to a pulp, the economy only created 38,000 new jobs last month. But hey, the unemployment rate dropped from 5% to 4.7%. But that's not the greatest number that you might hope it would be. Really, what that represents is too many people stopped looking for work. And I think a couple interesting numbers from that report. There are 6.4 million workers who are involuntary part-time workers who would like to be full-time workers but either can't find or land kind of the job that they want. And again, we're going to talk a little bit later about part-time income because I think that's an important piece of the puzzle.
Well, for sure.
And so I think the quick example that we can make on the participation of people in the work world is, let's say, Steve, you and I, we lived in a town that had 100 people. And of those 100 people, 95% of us had jobs, and so 5 people were unemployed. Hey, the unemployment rate is 5%. Great. But because part of the measurement of what the Department of Labor is looking for is, well, are you continuing to look for work? And so let's say of the 5 people in our town of 100 people decided, you know what, I'm discouraged, I'm tired, I don't want to keep looking for work. If one out of those 5 people stops looking, suddenly our workforce drops to 99. And the math, if you take 4 divided by 99, hey, our unemployment rate in our town of 100 people just dropped to 4.1%.
Yeah.
But that's not it doesn't make anybody feel good when people stop looking for work. So I think what the one-liner that we reference at Accunet Mortgage is, what is sour news for the economy is good news for mortgage rates. So I think one interesting note is this time last week, the 10-year Treasury, which is just one metric that we kind of look at, we keep our thumb on, last week that 10-year Treasury was yielding 1.86%. And at the close of business on Friday, the 10-year Treasury dropped to 1.69%. So for all the math fleets out there, that's a 9% drop in 1 week. That's a lot of volatility. Just for comparison's sake, if the S&P 500 did that, last week it had opened at $2,100. It would have dropped to $1,911 in the course of 4 days. If that happened, CNBC would be going bananas because the stock market just doesn't normally have that amount of volatility, and even half as volatile as what the bond market can be. So when we come back, what I want to highlight, we're going to quiz Brian on his favorite statistic from the report, and then also want to talk about how that impacted mortgage rates heading into this first month of summer when we come back.
You're listening to the Accunet Mortgage and Realty Show on 620 WTMJ. If you have a question, you can call us at 414-799-1620 or throughout the Midwest on the Accunet Mortgage toll-free talk line. That number is 1-800-877-1620.
Home buying advice from the guys who know it best. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Well, the Major League Baseball draft is less than a week away, so how much better can the Brewers make themselves with their draft position? Matt Pauley, who's in for Greg Matzek, takes a look on Sports Central tomorrow night at 8:07. You're listening to the Accunet Mortgage and Realty Show here on 620 WTMJ. David Wickert with us, and also on the phone from New Orleans, Brian Wickert. We left off the conversation following the dismal jobs report number for the month of May that came out on Friday.
Right. So, again, the general rule of thumb is what is sour, poor news for the overall economy is pretty good news for mortgage rates. So a quick rate roundup. So, per the Chief Honesty Officer, with 25% equity and all the other right stuff on a $200,000 loan, 30-year fixed-rate mortgage, at the close of business on Friday, Accunet could deliver 3.5% with an APR of 3.53 with just $1,500 in closing costs. If you'd prefer that Accunet pick up those costs for you, it's just an eighth difference in rate, 3.625% with zero closing costs. The APR is 3.64. That is just outright crazy cheap money. So the poor jobs report definitely helping on the mortgage interest rate side of things. So, Dad, I'm going to throw it to you. Did you have a favorite statistic or something that was most eye-opening to you from Friday's jobs report?
Yep, I do. Thanks, David. And this is my favorite number from the report. Keep in mind, we've got a country of something like 330 million people, something of that in that neighborhood. There are 151 million Americans that are working. That number, and those are the people that are paying all the income taxes, folks. And that's the vast majority of taxes that get collected, at least by the federal government, are from income taxes. So you get 151 million people paying all the bills. That number was almost the same. According to the household survey, it went up 26,000. Is all that budged from April to May. And yet, as David pointed out in his really good example, what really happened to make the unemployment rate go down was that 460,000 people stopped looking for work. That's not good for the economy because we need as many people working as possible. Another couple of nuggets, when you're on vacation, which Becky and I are down here this weekend, you do things you normally don't do, so I read a paper copy of the New York Times this morning.
What's a newspaper? I've heard of those.
Yes, please.
Yeah. And here was something talking about labor and productivity. A couple of interesting statistics. John Maynard Keynes, the famous 1930s-era British economist, had predicted that by 2030, a mere 14 years from now, in wealthy countries, the average worker would only be working 15 hours a week. Can you believe that?
Yeah.
That ain't happening.
No.
And then the other thing that I plucked out of some of the other labor statistics is that I was surprised at this. Relative to April numbers is the latest numbers we have for state by state and metropolitan area. unemployment rates, the Chicago, Milwaukee, Indiana mega metropolitan area actually has the highest unemployment. I think that's influenced mainly by Chicago, where it's 6.2%. So crazy good rates as a result of this. This was a very, very big surprise. The market had expected the economy to create 155,000 jobs in May. So we missed as an economy by over 100,000. Also to note, the average number of jobs created over the last 3 months is about 106,000 per month. And the average for the 12 months preceding that was more like 210,000. So there's definitely something going on here in the labor market. So those are my comments, my favorite numbers from the jobs report.
Very good. So when we come back, I just want to comment on kind of the odds of what the Federal Reserve is going to do at their mid-month meeting in just a couple days, and then also want to get to a cool infographic on the second largest group of people buying homes when we come back.
Here on the Accunet Mortgage and Realty Show on 620 WTMJ.
Getting you into the home of your dreams. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Well, with the summer travel season upon us, how has the industry changed from the baby boomer generation to today's era of millennials? Get some perspective from a travel expert who joins the guys on Wisconsin's Afternoon News to talk about that tomorrow afternoon at 4:21. Speaking of millennials, our millennial loan consultant, licensed loan consultant, David Wickert, leading the charge this morning here on the Accunet Mortgage and Realty Show.
So I wanted to talk, and I'm going to be a little coy, we're going to talk about not the largest group of people buying homes, but the second largest group of people buying homes. So I'll give it away. The largest swath of home buyers are married couples. But Steve, I'm going to quiz you. What percentage of home buyers make up, are the married couples? Is it 45%, 55%, or 65%?
Married couples. I'm going to go 55%.
Correct. So married couples are making up more than half of home buyers out there. But the second largest group, again, we're going to do a quick quiz. Is it single men, single women, or unmarried couples is the second largest group of home buyers?
I'm going to say single women because I'm currently renting a house from a single woman owner.
There you go. Yeah, you are correct. So single women make up 18% of home buyers out there. And I think to piggyback off of our conversation last week, the question we get day in and day out at Accunet is, well, how much house can I buy? And doing that affordability kind of budget calculation, the fancy word in our world is the debt-to-income ratio. Mm-hmm. So, and this comes courtesy of our friends here in Milwaukee at MGIC, the Mortgage Guarantee Insurance Corporation, for those playing at home. So the median income for single women, according to their little nice infographic, is $49,000. So if we do some reverse engineering for all the single ladies out there listening this morning, let's turn that into how much home can you buy if you've got that median income. So in the mortgage world, we're always talking about monthly income and we're talking about gross income. So that equals $4,083 a month as your gross income. Then we get to take 45% of that because we got to make sure that your monthly payment doesn't, blow up your monthly budget. So when we do that, we got to fit everything into $1,837. So kind of like what we did last week, let's give some examples. Let's say you got a car payment of $250, you got student loan payments of $150, and credit card minimums of $50. So that leaves us with $1,387 to go toward a house payment, a monthly house payment. In the Milwaukee market today, that'll buy you a house of $215,000. That's a pretty nice house for for one person, for one income. And I can attest, as a licensed loan consultant, kind of sitting on the front lines every day, that I'm having more conversations with young women than I'm having with young men. So my peers out there, guys, we got to pick up the pace because those young ladies are definitely got that home ownership bug. And I think other interesting piece on this study is that there is pent-up demand for homes because 36% of single young women are still living at home with their parents. So they are the second largest group, and yet a third of them are still living at home with mom and dad. And I think, Dad, this goes to the statistic that you had seen at the Mortgage Bankers Association, noting that we have a pending, if not already arrived, housing shortage for the number of people who kind of want to move out of mom and dad's house and find a place of their own. And I think, go ahead.
Yeah, we hear that all the time. And in fact, I know that you just had one of your single female 20-something home shoppers got an accepted offer this weekend. But she's been looking for how many months? 4 months?
Yeah, I mean, at least. And yeah,
especially in that price range, it's really tight. As we were talking about in last week's show, you know, when you're looking at a 4-month supply of homes, that's definitely tilted towards the home seller. It's a seller's market in that price range. By the way, how much of a down payment did you use to come up with that $215,000 purchase price?
That was just with a 5% down payment and no monthly PMI.
Okay, so 5% down on $215,000, you're looking at $10,500. You know, is all you need, which can come from a gift, by the way.
Yeah.
So if there are people out there that, you know, want to get started on home ownership, remember we do have some programs with as little as 0% down. We have others with no income limitations at 3% down. And as David pointed out, the world is kind of your oyster at 5% down. But again, all the money can come from a gift. Nothing to be ashamed of. That's how Becky and I bought our first house, is we got a gift from my mom and dad.
Back in the day. All right, so when we come back from the news break, I want to talk about, and this is self-serving, but a millennial topic, talking about part-time income and how that affects mortgage qualifying when we come back.
Right here on the Accunet Mortgage and Realty Show on 620 WTMJ. It's now 10:30 on this Sunday morning as we head over to the WTMJ 24-hour newsroom and welcome in Colleen Bolin.
Thank you, Steve. Former House Speaker Newt Gingrich says Donald Trump's criticism of a federal judge who's hearing a lawsuit against Trump University is one of the candidate's worst mistakes and is inexcusable. On Fox News Sunday, Gingrich says Trump was wrong to accuse the judge of bias because of his Mexican heritage.
If a liberal were to attack Justice Clarence Thomas on the grounds that he's black, we would all go crazy. Or every conservative would say it was wrong, and it was racism.
Gingrich says Trump has to recognize that he's now the potential leader of the U.S. and should move his game to a new level. Police are trying to determine a motive after the bodies of 2 men were discovered this weekend. Police say they both had been shot several times. They were found in an alley near 21st and Atkinson Saturday. A car riddled with bullets was also found nearby. And floodwaters are slowly receding in Paris, where the worst floods in 3 decades have left a mess. Emergency crews are pumping water out of a key Paris highway interchange. South of the capital, 300 cars and big rigs that have been trapped on a highway for 4 days are being removed and returned to their owners. WTMJ, PellaWI.com, time saver traffic, 94 inbound from Highway 16 to the Zoo. That will take you 10 minutes. The Zoo to the Marquette is 6. 4145 southbound Highway Q to the Zoo, that's 14 minutes. 43 inbound from Brown Deer Road to the Marquette is 10 minutes. 94 inbound Layton Avenue to the Marquette is 6. And 894 northbound, the Hale to the Zoo, that's also 6 minutes. And the WTMJ 5-day forecast. Today, partly cloudy and breezy, scattered showers in the afternoon and a high of 74. Tonight, a chance of showers early, otherwise partly cloudy, a low of 60. For Monday, partly cloudy with scattered showers, a high of 75. Tuesday, partly cloudy and cooler, a slight chance of showers, a high of 67. Wednesday's mostly sunny, a high of 72. And Thursday, partly cloudy, a high of 78. Right now in Janesville, it's 67 degrees, in Mequon at 65, in Milwaukee at 65 degrees. See the Storm Team 4 7-day forecast tonight at 10 on today's TMJ4. I'm Colleen Boland, News Radio 620 WTMJ.
Don't break the bank to get into a house. Back to the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Actually, licensed millennial loan consultant David Wickert leading the charge this morning. You know, you were mentioning about working with that single young woman, that millennial age woman.
Yeah.
You guys do a great job of, I think, educating a consumer about the whole mortgage process because it can be kind of daunting.
Well, and I appreciate that, Steve. And I guess the way that I always frame it is none of us get to go to mortgage class in high school or college. So it's okay if you don't know, and that's the approach that we take. There's no dumb question because unless you've bought a house before, even for some people who have bought a house before, they still have legitimate questions. So we definitely try to take that educational approach. And I wanted to throw it down to Dad down in New Orleans. Dad, what are you doing down in New Orleans, by the way? Oh, all right. We'll come back to Dad with his take on all the good things down there in the South. So I wanted to talk about some part-time income, and I think that's a definite millennial challenge for anyone who's trying to get a mortgage. And I get it. I'm a musician myself. I've been a little league umpire. You try to make a couple extra bucks on the side, on the weekend or on weeknights. It just greases the skids a little bit in your budget and helps pay for beers, when you're watching Game 2 tonight of the NBA Finals. But when it comes to underwriting, though, part-time income is all about track record and recent history. So the income that underwriting is most comfortable with is full-time, 40 hours a week salary. We call up your employer during the process and ask them, hey, is it, likely you will continue to be employed going forward? They say yes, and bam, you get a new mortgage. Anything kind of short of that, and it becomes degrees of documentation. For example, we got a blog post on our website at Accunet.com talking about business owners or self-employed people and kind of the documentation you can expect there. But on part-time income, I guess obviously it has to be documented. So cash income does not work. But for part-time income, what we need is a 2-year documented history of you doing that work. That's what the rule book says. We're just following kind of the widget manual for loans that get manufactured and sold to Fannie Mae and Freddie Mac. So, maybe, for example, some part-time income, let's say, cool, you prepare taxes during tax season and have been doing so for the past few months. And in fact, I helped a corporate accountant buy a home last month doing exactly that. Totally fine. Just got to have that track record. And I guess the way that I frame it to people is that there are two sets of reality. The first reality is the one you're living in every day. And of course, if you're working a full-time job and pick up some part-time income, obviously all of that money is going to help, pay your bills, including your mortgage. But in the reality of mortgage underwriting, there's just a different lens that can be much more conservative. And so, if it's just you on the loan and if it's your part-time, you just picked up your part-time work recently, the only income that we can use to qualify you in the eyes of the mortgage world is that full-time income. So, again, part-time income totally usable if there's been that track record, because that's the thing that ultimately makes underwriting the most comfortable. And so when we come back from this break, Brian, Dad's got two good stories, one including some teachers utilizing some part-time-ish income and how we can or can't use that going forward, and then another story talking about pre-approvals gone sideways. So when we come back, we'll talk about those stories when we come back.
Right here on the Accunet Mortgage and Realty Show on 620 WTMJ.
Expert advice on buying a home. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
While Donald Trump continues to get much of the media's attention, what about Hillary Clinton? How will Tuesday's primary in California impact her nomination? We'll talk about it with Jeff Wagner tomorrow at 1:35 right here on WTMJ. David Wickert leading the charge this morning here on the Accunet Mortgage and Realty Show on 620 WTMJ.
So just wrapped up talking about some part-time income and wanted to throw it to Dad down there in New Orleans to talk about some tenuous income for two teachers on kind of the part-time-ish end of things.
Right. This was really interesting, David. I talked to these people last Tuesday. Of course, they had already been pre-approved by their big giant bank, and it was one of those slapdash pat-on-the-rump pre-approvals. As we started talking about it and getting into the details, it turns out they're both professors, and so the husband in this case had been teaching part-time for 2 years, no problem, right? Except he didn't have his contract in hand yet for the fall semester for his part-time teaching. In fact, it's not coming because they're about to make him a full-time offer. So let's say, okay, there's an interesting complicating factor right there, but let's put that aside for a second. Interesting thing number two, and I don't have their documentation yet, but the other professor told me she gets part of her salary from the university and another part from a grant from the National Institutes of Health. Well, that's interesting. So, of course, then this goes to the continuity or likelihood that that extra income, let's call it, from the grant is going to continue. Well, the answer there is you never know. Yes, it has been continuing, but there's no guarantee. So your typical bank loan officer is just going to say, how much do you make? The customer answers, and they move on.
Yeah.
With Accunet's rock-solid, fully verified and guaranteed pre-approval process, we're asking the real questions that will be answered when you actually have a property under contract and discovering these potential potholes ahead of time.
You know, I had a similar example this week of a home buyer who we are going to be using some Social Security income that her kids are receiving because of a deceased parent. And one of the things, to your point on the continuance portion, like, hey, is this money going to keep showing up in your bank account? That's what continuance means. That Social Security income has to stick around for 3 years. Well, the oldest kid is 15 years old. So he's going to turn 18 by the time, that 3 years is up. So of the two kids, we're only getting to use one of the two Social Security checks kind of down that path of non-normal income, non-40-hour-a-week income.
And now, in the case of these professors, a couple of other interesting facts. We have this really cool program that I'm going to use again, by the way, on somebody buying a home in Florida. It's called the Freddie Mac Future Income Program because, in my case, this professor is going to get his full-time job offer somewhere in the middle of June, but he's not going to start receiving the full-time salary until September. No problem. Under the Freddie Mac Future Income Program, we can use that future income from his full-time job right now to qualify for that mortgage, and they can close up to 90 days before he starts that new full-time position. So a combination of things there. The last interesting thing was I always ask people, have you already selected a real estate agent that you're going to work with on the buying process? And the person said, well, yeah, we think we have. I said, well, who is it? And, what's their background? Well, they said the name, and I happen to know it was a rookie agent. And so I said, well, hey, that's fine. You can work with him, but let me also give you another name to work with, a person who is one of the top two agents in the North Shore where they're going to be shopping for their home, and who I personally know to be an expert at all the details that come down to drafting a good offer to purchase. Because we've talked about that time and again on this show. It's all about the details, not only in mortgage lending, but in crafting that very first draft of the offer to purchase to protect that buyer without scaring off the seller. So these people are very happy. They met with the realtor that I suggested. They're going to move ahead with them, and I think that's going to have a very happy outcome.
Dad, on that future income program, that's you can do 90 days out. Is it a matter of they have to have the offer in hand? You have to be like, Joe Smith is going to start on, what's 90 days from now? September 4th.
That's right. It's got to be signed by the employer, and it also has to be signed and accepted by the employee who's taking the job. I had another one just like that, and I know we're coming up on a break here. where it's a medical student and a nurse moving here to Waukesha. And so the initial offer letter had some conditions on it, like you got to pass your drug screening and you got to pass your employee something. We had to get that removed, before that offer letter counts. It can't be conditional upon something big like that. But still, a great program, as little as 5% down, Steve. 5% down on the Freddie Mac Future Income Program. Very powerful tool. Not everybody has that because not everybody has an outlet for Freddie Mac. Some banks out there only sell to Fannie Mae.
Very good. All right, so when we come back, last segment of the show, we've got two stories from the front lines of real estate. One, how to price your home or how not to price your home. And then a second, the pre-approval, as Dad likes to say, the pat-on-the-rump slapdash pre-approval from a large bank. When we come back.
Right here on the Accunet Mortgage and Realty Show on 620 WTMJ.
Find a place to call home without the headache. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
And here's David Wickert.
So wanted to talk about a pre-approval, as Dad likes to say, the slapdash pat-on-the-rump pre-approval from a large bank who kind of just takes everything you say at face value without really diving in past that. So we had a borrower call in who the story went that they had gotten their pre-approval from the big bank, they had checked their credit, and the pre-approval letter that they included on their offer showed that they were qualified for a loan with 20% down. And so the buyer's agent took that pre-approval at face value and wrote up the offer with the financing contingency reflecting a 20% down payment. And the first-time home buyer signed the offer, and the seller accepted. What could possibly go wrong, you may wonder? Well, after they got the accepted offer, the buyer wisely decided to apply with Accunet, and at that point discovered that, no, they do not have the means for a 20% down payment. And in fact, because of the combination of all their monthly payments and minimal funds, the only type of loan that they qualify for is an FHA loan with 3.5% down. That is markedly a different kind of offer than conventional financing with 20% down. So understandably, the sellers are a little bit upset,
they're not a little upset. They're way upset.
They're a lot upset. And so I think, Dad, your opinion on maybe who's to blame in kind of the whole situation.
I'm going to spread it around here. Chase Bank. Oh, did I say their name?
Oh,
the big bank's name is Chase. They're to blame for not understanding or investigating anything about the home shopper's finances other than their credit report. Then the buyer's real estate agent, really, they didn't think to ask, hey, so you're putting 20% down, right?
You for sure got that money, right? Yeah,
you've got that. They just blindly took the Chase pre-approval and wrote up the offer that way without explaining it. So, that's not going to happen, obviously, if you go with Accunet Mortgage and our rock-solid guaranteed pre-approval. Even if we do a credit verified only, we're going to still ask all the questions, like where's the money going to come from? I think if I was a practicing real estate agent out there working with buyers, every time I was writing up an offer, I'd say to the buyer, okay, $200,000 home, you say you're putting 20% down, so you have $40,000, right, plus the closing costs?
Right.
Because it's probably going to be more like 43. Are you comfortable with that? Do a little double check there while you're putting that together. So, bank is to blame, the buyer's real estate agent is to blame, the buyer is to blame for not paying attention to the details in their contract.
Well, and if you put yourself in the shoes of the seller, if you had two offers in hand, one was 20% down and one was 3.5% down, it's a matter of making the seller comfortable, because ultimately the only thing a seller cares about is, can you deliver the goods? And the percent down is definitely a reflection of what is my strength in offering to buy your house. So
20% beats 3.5%, and then a lot of sellers agents know, and sellers therefore, that FHA loans can be a little pickier on the appraisal.
Right.
That any handrails that should be there and are not. That is going to have to get done before closing. Peeling paint out of concern for lead poisoning is another issue on FHA loans.
Well, and I think this goes to maybe the heart of our rock-solid pre-approval process and program. And in a hot market, I think any buyer needs to assume that you are competing against another offer, because any house worth buying is going to have more than one offer. And so I have started now to compare our rock-solid pre-approval to, if you're going on a first date, you obviously want to be the most attractive version of yourself. You know, you're going to hit the gym that morning, you're going to buy a new outfit, you're going to do all the things that make you look the best. And so a buyer should show up to write an offer demonstrating to the seller that they have done their homework. As I say to anybody who calls into our office, if you had called in and said, hey, I have an accepted offer on my dream home, I think the first thing all of our loan consultants would say is, congratulations. That's pretty awesome. And the second thing we would say is, here's the list of documentation that I need to prove that you can buy the house and pay back the loan. And so what we're doing is all that homework before you are writing an offer on a home, because we got to do it anyway. And so let's demonstrate to the seller of the home you're trying to buy that you are ready to go. That literally the last piece of the puzzle is you have to get an address to purchase. And
an appraisal.
That's
a lot easier, though, and in certain cases, that really, having done the rock-solid pre-approval up front, really allows us to expedite the closing or the financing contingency, which can sometimes be a key to the seller. You know, it's not always about the price. It's also sometimes the timing of the closing that matters.
Right. All right. So to wrap up today's show, I think, you know, per the jobs report, what is interesting to note is that the odds of the Fed raising interest rates plummeted from about 50-50 odds to like 6%, according to the CME group, which monitors that futures contract and all that good stuff. And so the other item that's coming up on the economic calendar is the Brexit, the British exit from the Eurozone, the portmanteau, combining those two words together.
What's that word again, David?
I've
never seen that before.
Yeah, the portmanteau. When you make up a new word like jazzercise or Sharknado, that's a portmanteau.
Did you know that, Steve?
No, I did not. I learn something every week on this show.
Portmanteau.
So that's coming up. That's about a week after the Fed meets later this month, and it's a great time to buy a house. And like I said, you got to be the most attractive version of yourself when you get out there. So to get started on the rock solid pre-approval, you can go to Accunet.com and click on the blue button. That's ACCUNET.com. That's all the time we got. Appreciate it, Steve, and we'll see you back at home, Dad.
This has been the Accunet Mortgage and Realty Show on 620 WTMJ. Straight ahead, we'll check in with Colleen Bolden in the WTMJ 24-hour newsroom.
The preceding was a paid program. Advice and opinions expressed during the Accunet Mortgage and Realty Show are solely that of the hosts or guests of Accunet Mortgage and Accunet Realty Advisors, and not WTMJ Radio or Scripps Media Incorporated.